Hello, everyone. Good afternoon. This is Jason Ulrich with Top Shelf Traders. Thank you for joining, and thanks for your patience. We just had a little bit of a delay on our end. Um, Thank you very much. Let's just start with a quick sound and visual check. If you could, just let me know through the questions box that you can hear me okay and that you can see my screen okay. Actually, it's Michael's screen that we've got pulled up. Getting yes and yes. It's just a few minutes after 12 on the East Coast. We're looking forward to a productive session today. Outstanding. Thank you. All right. We're pleased to have Michael Liddick with us today. Michael has, I think, one of the best names for his shop that I've come across in a long time, Back to the Future Trading. Please go to his website, especially if you are a Back to the Future fan. Has all kinds of flux capacitor references. It brought me back to that movie in an instant. So we're thrilled to have Michael. When we had the chance to have him join us and do this webinar, we were really looking forward to it. And the topic is incredibly timely, no pun intended. Leveraging time signals when trading futures. You know, a lot of the questions that we get from time to time are, well, hey, when is the best time to get into a trade? How do I manage the development of candles as a trend is unfolding, like similar to what we have at the ES? And how can I get the best entries and exits? And so Michael's going to be talking about this, and he's, as you probably saw in the event overview, chatting about 5 to 10 highest probability times that you want to be looking for, how to filter those existing trading signals, and then how to align time and price. So this is one of these events that I'm personally looking forward to tuning in, watching, hearing, and learning. As always, we're going to keep this very informal. So if you have questions, please don't hesitate to reach out and let us know. Michael, I will man the questions box for you. And then as always, yes, these events are being recorded, and so anything that comes through, we'll go ahead and we'll record it, and we'll also post it. And if there's any links or any offers that Michael shares as he's with us today, we'll also include that in our follow-up email. So, Michael, thank you for joining. It's great to have you. I know we've been talking about this for a few weeks now, so it's great to finally do it.
Yeah, I'm really excited. And hello, everyone. Welcome. I'm not a big fan of PowerPoints. I find that people that spend most of their time in PowerPoints are kind of scared of what you'll see when they actually look at the markets with you. But I just want to sort of, and this is going to sort of frame everything I show you in the charts that we're working on here today. Time is the ultimate medium for coming at the market. I have done nothing but look at market time for going on 10 years in May, and I have a singular focus. I have an engineering mind, and for 15, 20 years I was a high-speed machinery designer for commercial machinery automation, and I don't like not knowing how things work. And when it came to trading and working with traders, it became obvious to me in about a 2 years span of time that the rules to the game, the understanding, the operation manual for this machine I was trying to operate, it was hidden. It felt more like a casino than any other job I'd worked on, any other company that I'd worked with, any other task that I'd set my mind to. And it felt like walking into the Bellagio or the Paris Hotel or Caesar's Palace with $10,000, this idea that unless I'm really lucky, I'm going to leave here with less money than I came in with, because the house always wins. And so I'm going to stop at this PowerPoint uh, slide because I want to spend what time I have with you kind of walking you through the things that I've uncovered in relation to the fabric of time. And it really comes down to what should happen next. Trading ultimately is a fundamental guess, a high probability guess, a leveraged guess about what will happen in the future. What I found confounding, though, when I first started coming into this industry is that 85% of the people were focused on lagging indicators, things that were telling us about past events, prior events. And so it was curious to me that people were leveraging past information to predict a future result. And the only person I could find who had spent time working on time was this interesting man from Lufkin, Texas. W.D. Gann was part of a trading revolution, sort of a renaissance back here in the early 1900s. He and two other gentlemen, I believe, profoundly and fundamentally affected the way that traders today perceive and act in the market. And so Elliott, of course, is of the market structure phase, right? He's this sort of person that we get the idea of three waves to a double top kind of thing, the A wave, the B wave, the C wave. And he believed that the markets were predictable. But to be predicted, you needed to understand the structure and the wave movements in the market as they were presented to people. And then on the other side of the coin, you had Wyckoff. And Wyckoff said, hey, you have structure, sure, and then you sort of have these distribution patterns, and then you have these accumulation patterns, and I watch at key times for how volume is affected. And so over here you sort of had price action. Over here you had volume in relation to time. And then the Ganzamaka, as my Yiddish friends in New York would call him, the guy who kind of gets the least accolades because he was the hardest to understand. At the end, everything for him was based on time. And he was pretty clear about his feelings when it came to that. He said time was the most important factor of all. And at this point, he had my attention. I wanted to know what he knew. And he gave us the recipe. So computer programs are essentially instructions. They're instructions, oddly enough, in the last few months we've done a lot of research about patenting software. And the US government has an interesting position as per a decision a few years ago. And the government says that if a computer program is nothing more than a set of instructions that can be done by hand, it's not patentable. They want it to be linked to something mechanical, which I hold 3 or 4 patents, and I completely understood that. So Gann gives us the code, as it were, from his time, and he says, listen, if you study the past records of the averages of the market that you're trading, study the past records, you will be able to prove that history repeats, and you can tell the future. So I looked at this, and I took it at face value. A lot of people, when they study Gann, they want you to think that he's some Tibetan guru up in a cave somewhere, and you have to sit in that cave and contemplate life for 7 years, and when you come down from the mountaintop, you'll have a supernova aura, and you'll understand everything, and only until you do those things will you know. And Gann, he basically says, look, A, B, C. Do those things. And I want to show you what happens when we do those things. I'm going to close this junk out. Okay, so far so good, everybody? Great. I have two different workspaces with two different backgrounds. Some people prefer red and green over what blue and black and things of that nature. So I'm going to just kind of focus on the markets that you guys were looking at. And Jason had mentioned the ES in particular. And I want to show you today what we can do when we analyze the ES in detail using time. And we'll kind of spread this out here and autofocus it, and there we go. Okay, so let me break this down to its most basic components and go over exactly what the computer is doing. In essence, we've codified GAN. I've taken everything he said to do, and I've taught a computer how to do it. Okay, so we'll stretch this out here, pull it out, compress it down. There we go. All right, so let's go back to that slide only because it's an instruction set. He was telling us what to do. And so I want to review those steps with you real quick, because to some extent you can do this by hand, and I'll show you how here in just a minute. He says, by studying the past records of the market that you're trading, and in this case he was looking at stocks, you will be able to prove, so pretty ballsy, gutsy statement there, you're gonna see it, that history repeats, and that by knowing the past you can tell the future. I said, okay. So what is this program doing over here to the left right now? And Jason, what I've set it up to do is essentially the following. I think of time as a material like clay or air or water. Time is, in many people's minds, this sort of mysterious, supernatural, spiritual, can't really get my head around it. I think of time like a block of wood. It's a fabric. It's something tangible and palpable. And so when GAN gives us these instructions and essentially says, look, if you want to know what the banks are going to do, you have to understand how they manipulate this material of time. And so I take him quite literally when he says study the past records. Today is a Tuesday. Holy crap, it's almost December. Whew. So today is a Tuesday. And what I'm going to do is just put in a green box right there. So Jason, one of the things we discovered about 10 years ago was that you can study the past records of this market in two directions. You can go back and look at the last several days sequentially. And so, in essence, if we study the past records, I can go back and look yesterday. I can go back and look at what happened on Friday, and so on and so forth. I can go back and look horizontally in the past, okay? So you're starting to see why the name Back to the Future comes to mind, right? This idea in the movie where Biff gets a hold of the sports almanac and it tells him what the sports scores will be for the next however many years, 40, 50 years. So we're sending the computer back into the past and we're saying, look, I want you to look at what happened yesterday, Monday, Friday, Thursday, and Wednesday. And computer, are there any times during these days where price is being pushed up by the banks or price is being pushed down by the banks? Now remember, this exercise presupposes that Knucklehead from Texas is right. He said you're going to see it if you look for it. So most people don't look for it because they don't believe that it's possible. Most people don't look for it because they don't believe the banks would do that. But I believe the banks don't care because they know people are fickle. Their tendency to trade discretionally disarms them. Their herd mentality allows banks to push them into stop runs very easily. And people aren't looking into the future. They're looking in the past with these lagging indicators that they're so attached to. In fact, there's this really wonderful study I came across years ago. Let me see if I can dig it up. They actually researched how people behave And we have something, there it is, Mr. Magoo. If you're old enough to remember him, we can be friends. Professor Michael Roberto from Northeastern University, I believe, he discovered this. Humans as a species, you right now have a weakness. You have an Achilles heel. And banks leverage this. We place too much emphasis on information and evidence that is readily available, such as recent events. I believe it's one of the reasons why this election cycle was so bonkers last time around. You could literally call somebody a name, make fun of their hair or the size of their hands, give them a moniker that 5 years prior you could never call somebody in public, because people in these campaigns understood we don't think now beyond 2 minutes into the future. We have a very small attention span, smaller than any generation, I think. And we're always looking at what's happening right now. We forget what just happened or happened a few days ago. And that word I use is myopic, or the professor of the study said, we only see what's right in front of us. So the banks know that we would never go back and look for these times. The other way to study time, this fabric, this material, is to go vertically. And this turned out to be a very fruitful endeavor. As it turns out, when you study time vertically on a calendar, there's a weekday bias in every market. So I can go back and look at what happened last Tuesday. I can go back and look at what happened the Tuesday before that and the Tuesday before that, with the presupposition that Gann gave us. If you do this, you're going to see stuff happen that will blow your mind. You'll see people doing the same things at the same times over and over again. Now, never 100%, but trading doesn't have to be 100%. If you're right 40% of the time with a 2-to-1 risk reward, you've discovered an ATM machine. If you're right 60% of the time with a 1-to-1 risk reward, again, you leverage the odds and a statistically established edge. And so this chart over here on the left is an example of a vertical analysis. Let me show you what I mean. And what we're doing here is we're asking the computer a very specific question. If you go back and look 7 days ago, which would be the 21st of November, and you compile all of those 5-minute bars with the data from 2 weeks ago on the 14th, are there any times where the banks are consistently pushing price up or down? I.e., are there any times that Gann warned us about that we should be aware of? And one of the things that I'm doing here, Jason, is I'm telling the computer how large of a move I want it to search for. So let's take a look and kind of come at it manually for a moment and understand what that means, how large of a move. Because when you start to manipulate time, you need to define how large or how small of a cut you want to make. So if you walk in and you ordered a pizza, they'll ask you, you want a small pizza, you want a large pizza, you want a medium pizza? And we're going to tell the computer what size move we want it to study. And one of the best ways to do that is with something called a swing indicator. When you're talking to a computer, you need to define things very specifically. So Jason, if we were studying today for next week's patterns, Terry, if we were studying today for next week's patterns, I could tell the computer, hey, listen, I want you to use that swing indicator with a strength of 5. And I want you to look for all of the times that we've seen a push. And the computer says, oh, I know what you mean by that. Those pushes occurred here, 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 and so on. Does everybody understand what I mean by that? If we define the size of the swing, we're telling the computer by default what times we're interested in looking for recurrence. We're telling the computer what times we'd like to look for in the prior weeks and see if there's any alignment between those two. Now, Peter, if I increase the size of my filter, let's say we double it to a 10 strength, by default, two things happen. We've instantly cut the number of signals that the computer is seeing, and we've increased the size between the signals. So Jason, I no longer have this upper pivot here. I just have one large continuous time. And so we understand now through our comprehension of a swing definition that increasing the size of the swing by default decreases the frequency of the cycles of time that we're looking at. Increasing the size of the swing, therefore, conversely, decreases the frequency of signals. So using this, we can determine here now in the open how many times we want in our study. So let's say from 9 o'clock to 4 o'clock. In the description of this webinar, I told you that we wanted to find the 5 to 10 best times of day to look for entries and exits. Now remember, I'm going to keep coming back to this. The presupposition is that these times that are coming up are critical. They're important. They're not something that we can just sort of walk away from. Let me get back to that slide. I'm going to come back to this. You will be able to prove for yourself that history repeats. And this is someone who made a crap ton of money in front of other people watching him trade, turning hundreds into tens of thousands of dollars while he traded in the market. So I want to see if what he said is true. So if you're looking for the 5 to 10 most important times of the day, setting the size of the swing strength will help you understand what those times are. So with a swing strength of 10, for example, we see that inside of our study now, between 9 and 4 in the afternoon, we have 1, 2, 3, 4, 5, 6 times. That's definitely on the scale of what we're looking for. And if I change the size of the swing strength just a little bit lower to an 8 or a 7, you'll notice that we have the addition of 2 more. So there are 2 swings here that weren't there before, and now we're up to 7. So when I say the 5 to 10 highest probability times, what I want you to see is that on a 5-minute chart, a swing strength of 10 tells the computer what times to look for. And so in this case, we have 9:05. We also have 9:50. Then we have 10:50. We have 11:40. We have 12:45. We have 1:10. And then just kind of rounding the corner here, 2:25. And last but not least, 2:50. Now, when you find these times, we need to assign a binary value to them. What do I mean by that? We need to assign a binary value. So at 9:05, we had buying pressure. At 11:40, 12:45, 2:25, we had buying pressure. And then at 9:50, we had selling pressure. And then consequently, the other times to the right were also selling pressure times in our window. So this date, in fact, was the 27th. That was Monday. So the prior Monday would be the 13th. Okay, so let's try to do a study by hand and see if there's any recurrence. And I'm going to take this chart. I'm going to save this as a template. And I'm going to open a new chart. So you can see here the technique that I'm teaching you is not very complicated. It's extremely time consuming. And one of the reasons why I think Gann maybe was a little autistic. You know, this idea of another popular movie, Jason, this idea of Rain Man with Dustin Hoffman and Tom Cruise, this person who could complete complex mathematical calculations in their head. I think
Another
Gann
classic. That's perfect.
Yeah, I think Gann could do that in his head. And when people tried to understand what he was teaching, honestly, I think they melted down because it was too much to keep track of. So I want to at least show you how to approach it manually without the need for software. So let's go back and use a vertical analysis. I'm going to get the data box up here to see where I'm at. I have the 27th on the left. I'm looking for the 13th. Okay, so we're on the 13th right there. And so now we're looking for 9 o'clock to 4 o'clock. Okay, so this is our vertical study. We can close this, and I'll just make a note right here. This is November 13th, which was a Monday. And this is November 20th, which was also a Monday. Everybody following so far? If I'm going too fast, let me know. I can slow down. Okay. So now, the way Gann's brain would approach this would be to look and see what times are moves occurring in both avenues. And so here we have a time of 9:05. Here we have a time of 10:15. Here we have another time of 12:15. Here we have a time of 1:10. And then the last time is 3:30. Does anybody see any times between those two charts where correlation exists? Are there any times where, now that you've seen what I've shown you, you would be particularly interested next Monday when the market got to that point? What do you see there that you maybe didn't see a few minutes ago? What might a computer uncover if it was doing this automatically? Anybody? If you had to trade one time next week in the ES and you had to be profitable, what time, based on this analysis, would you have the highest likelihood of seeing your trade go in that direction? Very quiet group here today.
Let me take a guess. 9:05 maybe?
That would be one of the first ones to see. There you go. Bingo. Okay. So 9:05. And then we sort of have this idea of 9:50 and 10:15. So one of the things the computer starts to do is it says, hey, 10:15 2 weeks ago was a pivot. What did 10:15 do 1 week ago? Now, Jason, watch. You see where I'm putting this arrow right here? The computer then looks to see, is 10:15 consistent week to week? So I'm going to use a different color text file here just to keep track of where these are coming from. So when the computer looks at 10:15 2 weeks ago and says, hey, did the same thing sort of happen last week? Do you see how the market just one bar later pivots down? There's somebody both weeks trying to push price down at 10:15 as well. There's selling behavior here, and there's selling behavior here. There's something happening on Tuesdays lately where banks are trying to get rid of or take profit at that point in time. So it's kind of cross-referencing 10:50 over there and then sort of 10:50 over here. Now here's where things get really interesting. And one of the reasons why I gave you the handout. So I gave Jason a link to put out in the room, and this is a really cool book. And I've spent 10 years decoding time. Jason, you see over here how 10:50 was a selling pressure signal on that 1 week? It's a red dot right there.
Got it. Yep.
Okay. On page, this is a great book. On page number 22 of that handout, this is sort of everything I know about time in a simple to read book here. So you guys can use this when you're using this technique. When a selling pressure signal appears at a new structural low, it behaves like a green dot. Think of it like a double agent. And if we're coming into that time, and that time turns out to be a brand new structural low in relation to prior swings, this is what tends to occur. And you'll see on the following page that the time was right, but the direction reverses. It inversely moves out of that pivot. So the time is the ultimate marker, but in relation to price structure, when a red dot occurs at a low, it tends to invert and go the other direction. So I want you to keep that fresh in your mind and look at the 1050 signal over here. And Jason, if we apply a 1050 signal on this chart and put a red dot on top of it, can you see how that behavior pattern reflects what we would expect to see when a selling pressure time arrives at a new structural low? You see how it's kind of pulling out of there instead of dropping?
Got it. Yeah.
So these 7 patterns in this book are 10 years of me going, what? Why did it just... Oh, every time it does that, it seems to do this. And so when you're doing this study by hand, if this is something you want to do on your own, there are sort of... Use this guidebook. Use the guidebook. After you harvest key times from your market. So you're going to look back 1 week, 2 weeks, 3 weeks, 4 weeks. You're going to look back 1 day, 2 days, 3 days, 4 days. And you're going to find that there are these times. Time X is usually a selling pressure time. Time X2 is a buying pressure time. Time X3 is a selling pressure time. And when you get to those times in the future, when you arrive at those times, when they meet the conditions of those patterns, Luis, I gave Jason the Dropbox link, and I think he's going to paste it into you guys here.
I'll put it in here in just a second.
Yeah, no worries. Everybody's getting, you get a car, you get a car. Remember Oprah Winfrey on her once-a-year thing? We're all going to Hawaii. This lady's crazy. So I don't like doing things by hand because, Avinash, Luis, it tends to introduce discretion. And I don't like discretion, especially my personality type. I tend to put rose-colored glasses on everything. And I want it to be what I want to see. And so I want you to think about everything we just did in relation to the E-mini S&P today. And I'm going to go through what I told the computer to do. Remember, instructions. The government doesn't think I can patent something if we can do it by hand. Well, we just did it by hand. I'm going to tell a computer to do it because it's a $2,500 computer and it's got to do more than check my Facebook in the morning. So, computer, do me a favor. Go back 7 days and 14 days, and with an 8-point swing strength, can you perform a comprehensive time analysis and tell me what times in the future to expect a buying pressure or a selling pressure signal based on the recurring time patterns in the past that banks are driving. And I've got 2 different ways to output that information, Jason. On the bottom is pretty cut and dry stuff. So let me squish this up. Everywhere we see a green line on the bottom is a time that if the computer could talk, if we had a Siri for NinjaTrader, it would say, possible buying pressure time at 12:55. Possible buying pressure time at 2:05. Possible selling pressure time at 3:05. And we're representing that information graphically, which is a big, fat, red selling pressure line. Now, we already know when we get to those times, guys, that it can be a pattern 2, which is a plain Jane selling pressure time, or Jason, it could be a pattern 4, which is one of those red dots at a brand new low. If you go further in the book, you also know that it can also be a pattern 6. So we know, looking at all of these times, when we get to them, that we can just flip through the book and look really quickly and see, what does this look like? What play are the banks running? You ever, my father-in-law watches football, and we used to watch, when we were younger, this guy John Madden, who used to draw on the screens. Remember John Madden? He'd say, well, this guy's passing the ball over here, and then this guy's button hooking over to the right, and they're running the blah, blah, blah play. And when I tell you about this histogram book, these are plays. These are things that I've seen happen thousands of times over 10 years when this particular structure in relation to time lines up. Now, one of the things that's pretty awesome is, Jason, most of the people that are failing are being sucked into positions where, here's a great question to ask. How many of you, as soon as you place a short entry, the market goes immediately against you long? How many of you, what percentage of you, as soon as you go long, the market drops like it has a bowling ball tied to it? The reason for that, as you ponder that, about 90% of people say that. The reason for that is because they're pulling people in to a liquidity trap. So Jason, right at this low, everybody looking at this chart, Luis, is screaming, short, short, short. There's no way I'm going to miss it. It's going to drop $100 more. We're going to Disney World! And the banks have set this pattern up in time. They've all agreed, when we get here, let's make everybody think it's going short. They'll sell to us at the lowest price possible, and then we'll just reverse it straight up. That's a play. So these patterns represent plays. Now, when we arrive at these times, it's very important to have an awareness in the future. Because remember, the guy did the study. The professor said, you are going to not pay attention to these patterns. We must know about them in the future, so you're paying attention. So, Beata, at the very least, Peter, what I'm proposing is a countermeasure to the traps that they lay for you. And at the very least, this histogram, which you can do by hand or you can generate automatically, is sort of warning you, hey, everything in this is going to scream short. Why don't you wait for some confirmation? Or why don't you maybe consider the other side? And you'll see that there's a dotted gray line that's telling us where we are in time right now. So Jason, over here, this time is telling me this is where we're at. That bar has closed. Everything to the right of that line, and here's where we ask, what should happen to the right side of the chart? Is the future. Everything to the left of that line, obviously, is the past. And this dotted white line is where we are now. You are here. And so, for the first time, I think, in futures history, there's an indicator that is warning you what you're driving into. How many of you go on trips with the family, you drive with the car, and my wife is an avid weather nut. She has every weather app ever created on her iPhone, and she's warning me what pockets of rain we're driving into as we go down the road. And so I thought, what a great example, because as you're driving forward here in this uptrend day, it's telling me what I'm headed into next, potentially. So there are two questions that traders have fundamentally consistently asked me. Number one, can I know when chop will occur? Number two, how long should I let my winner run? And these are two things that traders, and myself included for a very long time, are horrific at. So when I answer the question, how long should chop occur? I want to throw this by you. we're representing times, Jay, with these vertical lines, right? And so you'll notice in the histogram that the lines are interspersed at intervals to one another. So when you sort of have lines spaced apart, that's fine. But you'll notice every once in a while, guys, that the lines will kind of do that, right? So in relation to these pockets of time that have a wide interspersal between them, you'll notice that there are pockets of time, Jason, where it looks like a set of guitar strings. The lines are huddled closer together than before. And if we look down on the lower part of my chart here, you'll notice this morning the computer was warning us about one of those clusters. And Beata, Luis, it was saying, listen, 9:35, 9:45, 10:10, this thing doesn't open up and trend until we get to the other side of this block right here. And you'll notice this when you do the studies on your own if you choose to do them by hand. There are these times that appear back to back to back. And in the book that I've given you, again, we're going to reference this because it's a pretty good consortium of everything I've learned. You kind of have two choices. And my first recommendation, if you're a breakout trader or someone who sees the potential of a 2-to-1 risk reward, you'll see on this chart that we have a section of chop. And what I'll tend to do is, Jason, I'll wait for that section to fill in, because this is a chop zone that banks will use to essentially destroy all the weak positions, the dumb money. And make no mistake, I really think they think we're dumb. And so in that case, what I would have done here is I would have put a box capturing price between 9:35 and 10:10. Now, when I see that chop zone there, you'll notice that they've done something, and we'll blow it up here. Again, time is a material. It's a fabric that can be studied. Banks don't want you to study it. They don't want you to look at this because it exposes their one weakness, I think. So if we look at that chop zone, let me pull these candles up. Okay, perfect. You'll see that the price today was between 608 and 604 quarter. Inside of this zone of time where there's a bunch of bars together. So in essence, the computer is saying, when we get on the other side of 1010, they're going to pick a direction. And what I'll do, Jason, is this. I'll monitor to see which direction they come out of, because this is their playground. From 9:35 to 10:10, they're screwing people over hard as they can go. Everybody who got long at this breakout, they're like, whoa, how do you like this? And then they come back down and take out the lows from the open. Whoa, how do you like that? And so by the time you get to 10:10, 85% of the little guys are done. They've traded 5 times. They've heard the words stop, failed more times than they can count. I see that and I wait. I said, okay, do what you're going to do, and let me walk on the carcasses of the traders who couldn't wait. And I'm looking for a puncture of that zone. And what I'll do, Jason, is I'll take the breakout and I look for 200 and 100% of that zone as a target. So if they exit on the top, I understand how time works. I see their signals. I'm watching them run the plays. And now I'm looking at if they poke out of 08 and go to 08 quarter, I'll put my stop below at 04 quarter, and I'll look at getting out my first target right there. And now my runner has a really good chance of getting to 200% of that move. Everybody with me so far? So in addressing the question, how can I interpret the time charts to understand where chop will be? It's very easy once you understand that when you cluster these times together, you'll see those pockets. Okay. Now, one word, if I take this chart and I pull it over to the right, Jason, can you see that I already know the times for tomorrow?
All the way into the future, yes.
Yeah. So I can, when I use a vertical analysis, I can go a week out into the future. So all of these times that you're seeing here, I've been waiting 7 days for these times to arrive. And I can spell better if I try. So when we look tomorrow, we already see that there's a pocket. There's a pretty important pocket between this bar and this bar. That might be around 2 o'clock, between 2:15, 3:15, I'm sorry, 2:50, 3:15, 3:20. The poop kind of hits the fan. And then in the Asian session tonight, you'll see that there's a cluster sort of right here. And I can't get my drawing tool around it for some reason. But there's a cluster of lines right there. And that's one of the ways to look for a place where the banks are more likely than not to pull people into those traps. Now, if we're all good on that side, I want to throw this at you real quick. I am a strong proponent of trend signals. So when I started, I'm a horrible trader, very impulsive, very emotional guy, engineer, overthinking everything. And so over 10 years, I've talked to over 10,000 people. And the ones that are profitable seem to always say the same thing. I trade in the direction of the trend. Well, what do you do when the market's not trending? And their answer is always, I never know when the market is going to stop trending. And so I assume that the next signal will be a trend signal. And so what I tend to tell people, and especially students that I work with, is when the market is trending, and I tend to use a pretty good workhorse. This is a 120 EMA, and there's nothing magical about it. It's just a 120 exponential moving average. It's a pretty good way of measuring flow. And so I would advise people, Jason, to be focused on the times that we expect price to go even higher in a market where everybody is buying. So remember, banks need liquidity. They need people to push their positions higher and lower. And so when the market is trending, I now have these windows. I have these start-stop points where I can get in and get out or hold on with one warning. And here's the thought about that. If we purchase at 305, we can get out by 325 because we're expecting opposition. If I purchase by 450, I can be out by 645 because I'm expecting opposition. If I purchase at 740, vice versa, I get out flat at 820 because I'm expecting opposition. Same thing, if I play with the chop, I know that I only have 10 minutes to get in before the damage is done. 10-10, same thing. How long should I let my trade go? Well, if we're leveraging time and statistics, we now have a measurable metric, something that we can hold on to that isn't based on our gut. Because your gut, as I mentioned earlier, is statistically horrifically wrong. Mr. Magoo, the banks know that when you trust your gut, you're going to focus on what just happened. Sorry for making you all crazy. This is how banks perceive you. You're looking at your RSI, you're looking at your volume tool, you're looking at your overbought, oversold, crazy zero lag, whatever, and they know you're watching that. And so they set it up to look like it's a short when they're really preparing to buy. But on a day like today, you can have an understanding of, and this 11:30 signal, Jason, according to this map of time down below, remember, these times exist down here because of the patterns that existed in the past. There's nothing black box here. It's not pulling numbers out of its ass to make it look good on the bottom. The times that are on the bottom of the chart are there because those times have pushed the market consistently over the last few weeks at those times. So if you're long from 11:30 and you're saying, well, how long should I hold it? I don't know if I should be in it. I have 6 ticks. That feels really good. I'm not usually profitable. The computer's going, hey, dude, you got an hour and 10 minutes. Why don't you let this one go a little bit? And so the number one problem, I believe, is traders cut their losers way too late, and they cut their winning trades, rather, They cut their winners way too early. And so this addresses that sort of second question. How long can I let a winner run? I have, over the years, evolved the following defense mechanism for stops. And in the indicator, I can tell the computer, I'm a very visual guy. I think I read somewhere that 70% of people perceive their world visually. And what I've done here is I've told the computer to put the dot 3 ticks away from the high or the low of the candle. And that's where you can see these dots are appearing. I don't have any magical reason for that. Just over the years, I've noticed that, Jason, if the time is going to work, it's not going to puncture that dot. If the banks are really going to arrive and push the market higher, then I shouldn't see it go down much further than 3 or 4 ticks away from the low. And that's a good way for me to see if they're really there where I think they are. So when you're trading, let's say for instance you were in pre-market at 740 and you got to 820, you can now perceive these things as one of two guideposts. You can watch and see, hey, will they puncture that red line? Can you see right there how it kind of breaks that red line in the direction of the trend? That tells me, Jason, that the reaccumulation phase is beginning. We're pushing up through it. The uptrend is about to continue. All the banks had was that. And that's as far as they were going to resist. And so at 9:45, we almost puncture it, but not quite. And so I'd have been nervous right there. And at 11 o'clock, you can see the market again goes into this consolidation range where the banks are taking profit right on time. Sell, 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 sell. But still no puncture until the 11:30 signal. And then I go, okay, the uptrend is continuing. Until I see a green dot puncture, the banks are in uptrend mode. When I get to 12:55 and that candle closes and we're 3 ticks away, guys, if I see a candle that does this, even though my moving average is up, I already know that the trend is about to reverse because the buyers who were supposed to be here didn't show up. They're not coming to my party. So if I'm taking a longer term position, let's say for example you guys have some kind of trending indicator that you use to kind of stay in the trade. These red points now, Jason, are rest areas. They're places where you can anticipate opposition to your signal. So if you're long from 1010, for example, I know going into 11 o'clock that there's a window of resistance waiting for me. I'm going to have to endure 1, 2, 3, 4, 5, 6 bars of nothing, or potentially 6 bars of pullback before 11:30 comes to save me and have a trend resumption. Does that make sense? I know where the thunderstorms are down the highway where these intense pockets of rain might be. And psychologically, it has a profound impact on people when they're watching these kinds of time maps. Okay? So I can look on smaller time frames. I can blow this out also to a larger time frame. Time is fractal, and it behaves like a Xerox copier. I can use time to look deep and small at little nooks and crannies, or I can look at the whole English muffin. And according to the computer last night, and keep in mind this is not like a lot of the other junk indicators you've seen, these dots don't print and reprint and disappear and reappear. Where they are is where they've been and where they're going to be. And they're printing on the close of the bar because that's where the time we were waiting for was. So as of 4 o'clock this morning, the computer was warning us on a 1-hour chart, boom, that's a time where we should anticipate another push up, just like here, just like here, just like there. And we anticipate that to last all the way through and up into the beginning of the Asian session tonight. So this works on higher time frames as well as lower time frames, in this case, the ES signal that we were just watching here a moment ago. And I'm just going to come in and clean it up so we don't get too complicated today. I don't want to lose too many people too quickly. I just want you to hit the basics. So if you're using higher time frame confirmation like some of you do, and a lot of the profitable customers do, I knew from 4 o'clock last night, Eastern time, or this morning rather, to look for and pull out all of those buying pressure signals now. Boom, 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 boom. And again, I have the times coming up in the future waiting for me. These times exist because of the behaviors in the past that created them. They're not black box. I'm not making them up. These times are only here because they keep coming up when the computer goes to look for them. So last night, before the 4 o'clock signal, you'll notice over here, Jason, that we have that little puncture right there. You see that? It's like someone stuck their finger through a piece of bubble wrap and left a hole. When you see that, it tells me that the sellers were here, but they weren't really defending the position. They were kind of holding on to it, tongue-in-cheek. And so when I see that puncture like that, it's almost more confirmation that when we get to 4 o'clock, they were sort of half-heartedly defending that time. And I'm going to jump all over 4 o'clock when I get there. Okay. Now, I also have opportunities for people out on larger time frames, and I want to kind of bring this to a close. Let me see if I can find it. It would be under alpha.
Michael, I'm going to have a favor to ask too when you get a break in the action.
Yeah, sure. I'm in a 5-minute wind down pattern right now, just so you guys have a clue.
So, poor Julie, she's desperately, and I think I've looked as well. If you could help us with a link to that book, that would be great. And my apologies.
Okay, I sent it to the I sent it to you in the organizers and panelists chat box.
Ah, okay.
You should see it over there if you pop your chat box open.
If only I would pay attention, yeah.
Okay, Wednesday alpha. Okay, stand by. One of the things that I want you to be aware of, and I'm not going to go into it too deep here. I have solutions for end of day positions as well. And so I have tools that I've developed over the years now to look for these signals on larger scale time frames. So here's, for example, the ES on a daily chart. And these are some of the videos that you guys have seen me do on YouTube. And if we were watching with that same consensus for signals in the direction of the trend, you'll see the dates that we were aware of where banks were going to try to push price higher. And so in the upper right corner, you'll see a warning line. And it's telling me, hey, the next event is a phase 2 in 6 days and 4 hours. The previous phase 1 was on Thanksgiving. So that was the 23rd, right? Did I get that right? Yes. Which isn't here. So one of these little green dots is officially there. I'll just draw a line to it, but we didn't see it because there was a holiday and the market was closed. And what I can do on the end of day scale is I can tell you when to look for these pockets of resistance and these pockets of pushing. And the same rules apply that I was discussing with you earlier. I'm putting lines through the dots to kind of help me with my stops. And I'm watching for the opposition to tell me when I should see those kind of pullbacks like we saw. But similarly, Jason, if I see the lines of the red dots broken, it's a very strong signal to me that the trend is continuing higher. So can everybody see here, for example, that the signal from the 19th of October got punctured. And then again here, the signal from the 20th of November got punctured. Jason, it's telling me that, yeah, they were in there and they sold it, but they didn't really try hard. They didn't really stand in and say, no, we're going to drive price down $1,000 here. They sort of said, yeah, you know what, you guys go ahead. No, we're good. We need it to go higher. So right now on this chart for the ES, there are no indications that this market is slowing down. And one of the things that I've done in the past, and you can do this intraday as well, I'll teach you if you ever wanted to learn as a student, is I measure how far Jason price went each time we had one of these phases, between phases. So between the little green dot and the large green dot, phase 1 and 2, I'm coming through here, and Jason, you'll notice I'm seeing how far has it gone when they move. And now I'll take this line over here and put it at the low of this candle, and I use it like a ruler. And I'll say, well, one time we had that phase, it did this. One time we had that phase, it did this. One time we had that phase, it did this. And then one time we had that phase, it did that. Can everybody see what I did there real quick? So I have what I call an exertion analysis. And if this signal is going to work like the other 5 or 6 signals did before, I should see it go at least to this first line. So let's draw a zone there. And you can see we've already hit that first marker. Of the 3 that remain, the next minimum target, if they do what they've done at least 3 out of the 4 signals, the ES is up around 26.22 before 6 days from now. Now, can it fall 1,000 points off this cliff? Absolutely. But again, trading is a calculated guess. It's an edge. And here we have an edge based on time. So if all of your indicators are confirming and the volume is confirming and everything else is confirming and you're in a trade, then you have an idea of how long this thing should go before the next fat green dot gets there. And we have those same kinds of tools that work better in other markets. In this case, I have a tool called the Orion tool that works really good. Same kind of system over here in crude futures. And we can do these kinds of things at an end-of-day scale and an intraday scale as well. So there's my black background. Doesn't work really good in a webinar like this. We'll finish up here and yada yada, so on and so forth. I'm using NinjaTrader for all of our charts. It's the best program we've uncovered so far to be able to do these kinds of analyses. Most of the platforms don't have the power to let us do the analysis that we've gotten here together for everybody. Okay. I did promise Julie an offer for you guys. It's not available in TradeStation. Mike, they kind of took a step back with their coding, and they no longer support the kinds of calculations we need to be able to do to get that kind of information to you, unfortunately. So I'm going to paste something new real quick. I put some codes together for the trading guys here, the top shelf traders, because it's my first event with everybody, and I wanted to make sure that I did something really cool. And I've got 2, if you can copy and paste this whole darn thing.
Of course, yep.
I probably should have done something different. Hold on. Yep. I've actually got some promo codes and stuff for everybody here. There we go. That's what I need to do differently. At the end of the year, we always have a huge, crazy sale because that's what you're supposed to do. And there, that's the one you want to paste, that last section right there. What I've basically got on our website, if anyone's interested, there are 2 packages. And I don't want to sell you stuff, I just want to teach you stuff. But best way for me to teach you is as a client and a customer. And if you go to our website, there's sort of a bunch of packages. The one that I've been demonstrating to you today is called Time Warp, and if you trade the ES, it's really the one you want to work with intraday. And as soon as that comes up here, you'll see it on the site. I've given you a link to it in that thing that Jason sent you guys, and if you want to copy and paste that, I'll also give them those links to send out to all you guys after if you want it with the recording. We're taking $800 off this week from the $24.95 price, and the same thing with the end-of-day package. We're basically taking almost $1,000 off for everybody here. I don't know why that's not coming up. If it did come up,
It's in the chat box, everyone. I just put it in, and just to confirm, Michael, we've got warp link, warp
yep.
code, alpha link, alpha code, right?
Yep, and if anybody gets stuck later, here we go. So you'll see here the two products that I've just shown you. If you want to dig a little deeper and go and find out a little bit more, the intraday one that we've been looking at for the ES to decode those times is the warp, and the one that I was using for the end of day signals for the longer term setups, your options trades, your option trades, your calls and puts and position trades, maybe in your IRAs or 401s, is the alpha package. And so those codes that I sent you, black warp and black alpha, are each going to take $800 off for any of the top shelf guys that come in and want to do that, top shelf ladies. So I'm not presuming you'll want to or you need to, but if that was something you were looking for, I wanted to give you a nice gesture to get started with something like that.
Thanks, Michael.
So here's my path moving forward for those of you that are interested in this. And here's some homework if you're going to follow through. Number one, pay attention to time. So it's much easier if you're focused on one market and one time frame because you can see it better. Number two, read that book I gave you. That book represents 10 years of me sitting here just looking for this stuff. And if you can master those 7 patterns, you're going to find yourself picking up on the times where squirrely stuff is happening. Number 3, I would love for you to go back and read another book that I highly recommend. It's called Trading in the Zone. And if you look at time statistically now and reread the book written by Mark Douglas, you'll find that time signals, if we have a 60 to 70% window of accuracy, the stress of watching every bar throughout the day, the stress of knowing, is it going to go up, is it going to go down, how long should it last? Douglas talks a lot about the psychology of trading, and you'll find that it's a lot easier to trade if you know when to trade, and you're not sitting at your computer staring at it all day. So when you focus on time, a natural consequence or side effect of that is you're not looking at the screen like a zombie and you feel like you've been driving in a car for 10 hours even though it's been 3. Banks know that you do that, and that's why you're more likely to get caught in those stop runs. And then fourth, check us out. I've given you some links and some codes for this week. If you believe enough of what I've shown you here and you kind of knew this was always going on and you just want to grab it, you're more than welcome to. But feel free to stop by our website, give me a note, shoot me an email, and I'm happy to teach anyone who wants to learn. I think everybody needs to know this because ultimately this is a war, and we are up against people who do not play fair. And so I want to leave you with that last screenshot. You are playing on an unlevel field. Banks are communicating in the language of time. 85–90% of people I've met aren't even considering it in their setups. And so I hope today when you leave here you'll focus a little bit more on it. And the more you do, I kind of, not allowed to use words like guarantee, but I kind of promise that you're going to see a change in the way your setups occur. So I'm out. Guys, it's been a privilege. I'm grateful to everyone here today. Thank you for your time. tongue-in-cheek, no pun intended. And if you have any questions, you can let Jason or me know. I hope I can come back and share some new insights with you, and keep checking Jason's areas for future setups. I'm going to be producing some longer-term videos for you guys that will hopefully shed some light on some bigger moves coming up.
That was awesome, Michael. Thank you. For the group, we have at least one of Michael's articles that we'll be posting to the site if we haven't already, and keep an eye out for those videos as well. We will send a follow-up email with links to the offer as well as to the book that we put in the chat box so that everyone has that. And then for those of you that are asking, yes, this is being recorded, and we'll include a link to the recording as well. So for those of you that are just wrapping up the lunch hour, we'll let you go and grab a sandwich wherever you are in the world. Thanks as always for joining us. Keep an eye out for the next event that's coming down. And some really great feedback coming through here, Michael. So I hope you see that as well. Really, really well done. Thank you. So, all right, everyone, have a great rest of the day. We will get everything posted and then out to you. Look for an email from us. And thanks again for joining. We'll talk soon.